Hello there. Welcome to Cost and Management Accounting and 6. Still working on a question paper of June 2022. This question paper that we want to look at again today. And on this question paper, we want to look at the last question on that question paper, that is question 6. And that question 6 is this question that we want to look at. So we're going to start on 6.1. The following information is an extract from the books of Batumi Limited, who are working on job at DMX, balances on 1 June 2019. Then we are given a table here with job GMX. This is the balance at the beginning, which is 25,000, and we're given materials, patterns, fabrics, and then we are given the transaction during the year that we are given there. Then we also have a table that we are given in terms of materials, patterns, fabric, and indirect there. And then we've got the raw purchases issued to job TMX. Then we've got actual expenses incurred during the year that we are given there. And then additional information reads overheads are covered at 100% of direct labor cost. And on the required part, we need to record the transaction above in the general journal. And 6.1.1 is the materials purchased, and then we've got the materials issued, and then we have got indirect materials issued, total labor, and direct labor, indirect labor. So this is what we have in terms of this question. So basically, this question is on the general journal, very important to take note. We know that a general journal is the book of original entry. It's the subsidiary book that is recorded transactions from the source documents. Remember, on that accounting cycle, that when information is taken from the source documents, it is transferred to the books of original entry. That general journal becomes one of those books, and all the transactions that are transferred to the general journal are those transactions that do not fit in all other journals. Remember, from the name general describes that it is taking different uh, different types of transactions that are not included in other journals. Remember, other journals that we have got the cash book, the cash receipts journal, and the cash payment journal. We also have uh, uh, other journals like the cash book that is describing the cash receipts journal in the cash payments journal. And also we've got also other returns journals that we have there is types of journals. So all other transactions that are not entered in those journals, we put them in the general journal. So this is what we have in terms of uh, the general journal. We also have the petty cash journal. Many examples that we have in terms of journals. So this is what we have in terms of general journal. So we are going to present it in the form of the debit column and the credit column. Remember, the general journal summarizes the double entry that will be taking place in the ledgers. Remember, in the ledgers, we've got three different types of ledgers, whereby we've got the purchase ledger, the sales ledger, and also we have the general ledger. So three different types of ledgers that we have. So those transactions that are entered there can be summarized in the general journal. So this is what we have in terms of the general journal. So we are going to go to the answer section and see what we have in terms of how are we going to present this question. If we go to the answer section, this is what we have in terms of our answer section. We've got general journal of Particular Limited, and we've got the debit column and credit column. So we are just going to summarize the double entry here, and then we just give a summary of the double entry that would have mentioned above. That is, we are just giving a narration on the double entry that we've written on top. So this is what we have in terms of general journal that we are going to answer. So go back to the question and see what we have there. So in the question now, we are going to start with the first item, that is the materials purchase. So we are going to present the double entry that we have in terms of materials purchased. So we go up there, we see that we have got information in terms of the materials that we purchased. This is the column that we, the row that we have that is giving us information on what is being purchased. We've got 1,200, 10,250, 650. So let's try to add that. We are saying here to get the total purchases. We are saying total purchases, we are saying 1,200, then we add 10,250, and then we add 650. Let's try to add and see what we get there. 1,200 plus 10,250, and then we add our 650, and then we get your 12,100. So this is the total that we have there, 12,100. So we are going to summarize. Remember, this is material that is being purchased. So what is the double entry that we are supposed to employ when we are buying material, when we are purchasing this material? It means we are going to debit the material control, and then we are supposed to credit the bank. Remember, when we are buying, cash is going out of the business, so bank account has to be credited. Remember, the basic concept of double entry, that we debit the receiver and credit the giver. So bank, yes, the giver, money is going out, and then we are receiving in terms of material, the material that we are receiving, that we are purchasing, we are going to debit it. So this is the double entry that way. So you go to the answer section and just summarize that double entry. Go there, you see that this is what we have. So we are now here, we are now saying we are going to, the one that we are going to debit, we are going to write it first. Remember I said we are debiting material control, since we are receiving material control. And also we have to take note that material control is an asset also. Another hint that we can have in terms of which one do we debit, which one do we credit. Material control is an asset. You know that assets, when we are receiving assets, we have to debit them. So this is what we have. And when the asset balances are being reduced, we are supposed to credit, like what we are doing to bank. A bank is being reduced, so we are crediting. So we have material control, we are debiting, and the figure that we got there was 12,100. And then the same thing that we are going to credit the bank. We are going to credit bank. So this would depend if we have bought this material on using cash, or we are buying on credit. So the question did not specify whether are we buying on cash or are we buying on credit. Remember, when we are buying on credit, we are supposed to open the creditors account. So it means we also have creditors control. So we are saying it's either if you are buying using bank, we open the bank account. But if you are buying on credit, we have to open the creditors control account. So it's a bank or creditors control. So we've got 12,100. And we said in the general journal, after we have summarized the double entry there, we have to give a narration of what has transpired on top there. So here we are seeing that this is total material that has been purchased, material that has been purchased. So we can just say material purchased. And whenever we make a journal entry, it has to be closed, because this journal entry is not going to affect the transactions that we are going to enter beneath that. So it's also necessary that maybe we show that we are closing it here. It's not going to affect what is beneath that. So remember, this is 6.1.1. Then we go to the next item that we have there. We go to the next item that we have there. So you see that if you go to the next item, so if you come to the next item now, it's the materials issued. So we have to go up there and see what material was issued, so that we can be able to figure out the double entry. So you are seeing that we've got buttons 950 and fabric 6,500 and indirect 300. But if you look at it, there this is issued to job DMX, which means these are the issues that we have there: 950, 6,500, and 300. But you'd see that these material are going to different accounts because these are different. And you see that this 950 and 6,500 is representing direct material, and this one is indirect material. And remember, when we are posting these materials, direct material will go to the production control. Direct material will go to the production control, but indirect material will be posted to the manufacturing overheads control account, manufacturing overheads account. So this becomes the difference now. So it means we have two double entries that we are going to make in terms of issuing of this material. We are going to add this 950 plus 6,500 there. If you say 950 plus 6,500, you are going to get 7,000. 7,000 there. Let's try to add there 7,400, 7,450 there. So this is the total for direct material. So this is our direct material. Then this one 300 becomes our indirect material. So we can start by making the double entry of direct material 7,450. So remember, this material is being issued. So we are taking it from the material control. So remember, when we received the material, we debited. Now we are issuing, so it means we are crediting to reduce the amount that we have there. There. So we are crediting material control, then we debit production control. The same thing that we are going to do to indirect material. We are going to credit material control, and then we debit the manufacturing overhead. So this is what we have. We can just go there to make the double entries. That is there. So what we are doing here now, we are saying 6.1.2. We are now on 6.1.2. And we are saying on the first double entry, we are debiting production control. Remember, the one that is debited should be written first, production control, with the amount of 7,450. And then we credit the material control. The same amount, 7,450. And then after making this summary of this double entry, we have to make a narration there of what is transferred there. And we know that this is direct material. This is direct material issued. And remember, this is a journal entry, so it has to be closed. So we go to the next one, 6.1.3. Right, or 6.1.3, we can check what we have there. Six point one point three. Let's check what we have on 6.1.3. 6.1.3 is saying indirect material. So this is the indirect material that we are talking about. We had skipped it. We have indirect material there. So we have indirect material. Remember, it's 300. So this is indirect material. Remember, we have said we are debiting manufacturing overheads. And the amount is 300. And then we are crediting material control. And we have also 300. And then we make a narration that this is indirect material issued. Indirect material issued. Then we go to 6.1.4. Right, we can go back to check what we have in terms of 6.1.4. So on 6.1.4, we've got total labor, labor. So we go there to see what we have. Total labor, we go there, we've got information for labor there. Labor rate per hour is 10.50. Labor rate per hour is 10.50. And then hours spent on employees' cars, 10,000. And then we've got also indirect labor costs there, 35,000. So it means we've got direct and indirect. So this one represents our direct. So this is our direct. This represents direct, and then 35,000 is the indirect. So but the year is total labor, total labor which has been paid. So we are going to add the indirect plus direct there to get the total for labor. So for direct, we are saying 10,000 times 1050. Then we get what do we get there? Let's try to multiply that one. Let's try to multiply that one. We're going to get 105,000. So yes, 105,000. Then we are going to add 35,000 there so that we get the total labor. So 35,000 there, you get 140,000. So this 140,000, we just want to make the double entry of the payment of this labor. So obviously, money is we are paying, So it means we have got 140 there. So it means we are going to debit the labor control, and then we are going to credit the wages. We are going to credit the wages payable, labor control, and we are going to credit the wages payable. Let's just maybe go down to check the description of this one. This is just total labor. So what we are going to do is we are going to debit the labor control, and then we credit the wages payable, because we are just making a double entry of the total labor costs for the period. So we do that, we go there and summarize that on that one. So we are here, we are saying we are debiting the labor control. We are debiting the labor control with 140,000. And then we are crediting wages payable. We are crediting wages payable, which is 150. This is not a payment that has been made. We are just making a double entry of the total labor. So on the narration now, we are saying total labor costs for the period. So this is the journal that we have. Obviously, we close it. Then we go to the next one. What we have on the next one. We'll go and check what we have on the next one. The next one is now direct labor. So remember, we said we've got direct and indirect, and said this one is direct. So direct is this one, which is we multiplied and we got 105,000. So direct, remember, direct is transferred to the production control. So you're going to debit production control, and we are going to credit the labor cost control. The labor cost control. So we go there. And remember, we emphasize that when it's direct, we have to transfer it to the production control. But when it's indirect, it goes to manufacturing over. It's very important to take note of that one. Remember, here we debited is this 105,000 is inside the labor control 140,000. So we are going to the credit now to transfer it to the production control. So this is what we have. So this is now 6.1.5. So we are saying we're debiting production control. And with 105,000. And then we are crediting the at the labor costs control. Or the labor control. 105,000. So this is what we have. Then on the narration, This is allocation of direct labor, allocation of direct labor costs. So this is what we have. We can close the journal. We go to the next one, 6.1.6. 6.1.6, we can go and check what we have in terms of 6.1.6. We come here. This is the last one, indirect labor. Indirect labor is the one that we said here. We are given it as what 35,000. Indirect labor cost is 35,000. So we are just going to debit manufacturing overheads. We debit manufacturing overheads and we credit labor control. We debit manufacturing. Manufacturing overheads, which is remember the figure is 35,000, and we credit labor control 35,000. So obviously we make a narration again of allocation allocation of indirect labor cost. Allocation of indirect labor cost. So this is what we have in terms of the uh, the the general journal on the first part of this question, and then second part of this question. Let's go back to see the second part of the question requires us to prepare the manufacturing. Let's try to see the production control. We have the production control. So we are just going to prepare the production control only. Production control account, that's what we have. So it's not very difficult to prepare this production control because we have already prepared the general journal. So we're just going to pick the figures that we have in the general journal and transfer these figures to the production control. So what are we saying? We are saying the figures, the double entry that is production control, we just pick the figure and then transfer it in the production control account. For example, here on the first one, we don't have a production control account. But if you go to the second one, with the production control account on the debit side. So it means you're going to debit the production control. So we go to the production control and debit it, and we look for another one. But obviously, we need to have the opening balance. We go to the question to check what opening balance do we have there for production control. What opening balance do we have for production control? We go up there. So we have our 25,000 there. We have our 25,000 there. So 25,000 job DMX. This is the balance on 1/2019. So this is representing our opening balance for production control. Then we can as well enter those amounts in the we can enter this balance in the production control as our opening balance. So we go to the account that we have there for production control. So this is our production control, and we've got an opening balance of 25,000, and it has to be on the debit side. We are saying balance. This is our balance PT, which is 25,000. Then we pick the entries that we have in that general journal. We pick the entries that we have in that general journal. Remember, we said we have this one, which is on the debit side. So we're going to debit production control 7,450. Then on the details part, on the details part, we're just going to write material. The other account is material control. Material control is on the details, and then we debit it in the production control 7,450. So we go there for in our production control. go to the debit side, we are debiting. And remember the description there is material, material control. And the amount that we have there, 7,450. Then we go up there again to check what else do we have, which is affecting production control in those in the general journal. We are now on 6.1.3. We see we have manufacturing overheads on production control. We go to the next one, 6.1.5. We've got 105 there on the debit side of production control, and we write labor control. So we go there on the debit side again. We go on the debit side again and we say labor control. And the amount that we have there is 105,000. We go to check if we've got any other entry again that is affecting there 6.1.6. We do not have any. So this is the last one. But if you go to the question, let's go back to the question. The question is saying overheads are recovered at 100% of direct labor costs. So what does it mean? It means it's 100 over 100. If it was 50%, you're going to say 50 over 100. But this is 100, so it's going to be 100 over 100. And then we multiply by the figure for direct labor cost, which is 105, if you still remember. And obviously, you get again 105,000. So the double entry for this one, for this recovered, you are supposed to debit a production control. And then you credit debit production control, and you credit the applied manufacturing. You credit the applied manufacturing. So this is the double entry. So we're just going to the debit side of the production control and enter this 105,000. So I will go there. We are now saying applied manufacturing. $105,000. And then this is the last one, so we can now balance it. So we see we've got nothing on the credit side. So what does it mean? It means the total that we're going to have on the debit side is going to be our CD there. So we put our double lines on both sides. And if we add the total of the credit debit, we're saying 25,000 plus 7,450 plus 105,000 plus 105,000. We are going to get 242,000. 242,250. Sorry, 242,450, which is also going to come on the credit side there. Since we have nothing on the credit side, it means we are going to say minus 0. It remains 242,450. So it becomes our balance CD. So 242,450 is what we have there. So we can come here now. This is the same figure that is going to come there is our balance. How's our balance PT? Right, so this is what we have, guys, in terms of this video. Hopefully this video was helpful. We'll meet again in the next video. Those who haven't subscribed, please subscribe and share. Let's get notified. As for this video, I'm signing out.